Good afternoon, everyone. I am C. Ankit Sharma, your income tax faculty for today's session, and a very happy new year to all of you. I welcome you all in the first class of 2025, and I believe that you all are doing well and studying very, very hard to achieve the goal of your life, that is to becoming a chartered accountant as soon as possible. So once again, I wish you a very, very happy new year, and I believe and I pray that this year you will get success in your examination, which is going to be held in 2025, of course. So, Dinesh Kumar, Happy New Year. Bhumika, good afternoon. Bhumika, Happy New Year to all of you. Lahiri Majur, of course, Happy New Year. Manvi, good afternoon. Hardik, Happy New Year. Nitin, Happy New Year. Preeti, Pallavi, Neeru, Malu, Tambeshwari, everyone have a great year ahead. Okay, so we were discussing the provisions of TDS, advanced tax, and TCS, in which we have covered some sections of TDS like section 194C, 192, 193, 194A, etc., etc. And I asked you that please make short notes of these sections. That is going to help you a lot during the revision process and of course at the time of your examination also. Okay, so before starting the class, the thought for the day is, it says, dream it, plan it, do it, and then you will get it, of course. So of course it's a process, and definitely this quotation, this thought for the day definitely work for your process of becoming a chartered accountant. So first of all, you have to dream it. You have to dream for something. Whatever you want to achieve, there should be first the dream to become that person. Then you have to plan it, because without planning, it's not possible to achieve what you exactly want to do. So first of all, before start doing something, you have to plan for it. That if I want to become a chartered accountant, how will I start study? What would be the time for covering my syllabus? How I will start revision, etc., etc. So you have to plan your journey, and it could be a long-term plan, and of course should be divided into some short-term strategy and short-term plan. You cannot plan that I will cover my syllabus in 6 months. You have to plan it accordingly. That if I want to cover my syllabus in 6 months, then for the first month I have to cover that part of syllabus out of my subjects. Then you have to work for it, of course. That's the most important part, that you have to do it. If you only dream or if you only plan, but if you are not ready to work for it, if you are not doing anything to achieve that goal, then of course you will not be able to get it. And if you are doing all these things correctly, you are dreaming it, you make a correct plan for it, and if you are doing sincerely the work which is required to achieve your goal, then definitely you are going to get it. And if in any case you're not able to clear the group, even after planning it or doing it, you are not able to get it, then of course you have to again start from do it until you are going to get it. So that was the thought for the day, and now we are moving on to our provisions. The last class, we discussed the provision of section 194I. That was regarding the rent provision. So now section 194IB. You can recall it that when we were discussing section 194I, that was not applicable in case of those individual and HUF. Those individual and HUF whose turnover does not exceed 1 crore or 50 lakh in the preceding previous year. That means previous year 23-24. So for technically we can say that under section 194I, in section 194I, individual HUF, if they are pair, but the turnover and receipt does not exceed 1 CR or not exceeding 50 lakh in preceding year, so there is no liability upon those pair to deduct any TDS, etc. But for those pair, a specific section has been introduced under section 194IB. So now we can say if there is a provision of rent payment and if the pair is individual HUF whose turnover not exceeding 1 CR or not exceeding 50 lakh. Those are going to be covered under section 194 IB, and all other payers are going to covered under section 194 I. So now section 194 I has been specifically framed, drafted or made for those individual HUF, those was not covered under section 194 I. Okay. So now we are discussing the payment of rent. Section 194 IB requires any person. Now, who is the person? Only one category of person has been included. Those have been excluded under section 194 I. Those individual HUF other than those whose turnover exceed 1 crore or 50 lakhs. So technically, who is included? Those turnover does not exceed the specified limit. Clear? So they are need to deduct TDS at the rate of 5% till 30th September, and after that the rate of TDS would be 2% in this case. Now the threshold limit, you can recall it that under section 194I, the rent limit was 2,40,000, and that should be per annum, not monthly. We do not need to check if the estimated rent is going to be exceeded 2,40,000. We have to deduct the TDS monthly. But under section 194 IB, the limit is monthly limit. So it says if your monthly rent payment is exceeding 50,000 rupees per month or part of the month, then TDS is required to be deducted monthly, whether it exceeds 6 lakh rupees or not. So if the rent is 50,000 per month, that means for a year it should be exceeding 6 lakh, but there is no limit of 6 lakh under section 194 IB because it does not consider the annual payment of rent by a payer. But it consider if the rent is exceeding 50,000, then you need to deduct the TDS upon it. But there is one more difference. If you want to find out the difference between section 194 I and 194 IB, the first difference is as per the payer, but payer is different under section 194 I and IB. Second is under section 194 I, the aggregate amount of rent for a financial year that was 2,40,000 is need to be considered for the applicability of TDS provision. But for section 194 IB, the rent should be considered for the purpose of deduction of TDS monthly base. Now the time of deduction is again very crucial. The deduction is to be made at the time of credit of such rent for the last month of the previous year. Under section 194 IB, TDS not required to be deducted monthly on this rent. TDS need to be deducted in the last month of the previous year, or if the tenant is going to vacate the property before the March. Suppose tenant is vacating the property in January, then in the month of January. So we can say in March or the time the tenant is going to vacate the property, whichever is earlier, or the last month of tenancy. So the last month of previous year, that means March, or the vacated property, whichever is earlier. That is the time to deduct the TDS under section 194 I. Clear? As the case may be, to the account of the payee or the time of payment, whichever is earlier, same provision. So a very important thing is the time of deduction under section 194 IB. We have the example also, so you will understand when to deduct the TDS and how we need to deduct the TDS. Okay. No required to obtain 10 numbers. So payer does not need to file TDS return, etc. So he do not required to take the 10 number. Tax deduction account number. Meaning of rent means the same. Deduction not to exceed the rent for the last month. Again, this is also a very important point. So whenever you are making the short notes, so whatever points we are discussing, those are the very important points. So you have to consider those points definitely for the purpose of your short notes. Now it says where the tax is required to be deducted. Now the problem is this: we need to deduct the TDS at the last month, at the month of March. Suppose the TDS amount exceed the rental value, then the TDS deduction would be up to the amount of rental value. It cannot exceed the rent of the property for that particular month. Suppose if the rent is 50,000 per month. Clear? So for 12 months, that would be 6 lakh rupees. Now TDS deduction is 5%. So that means 30,000 need to be deducted in the last month. So in the last month, if in the month of March, I am going to pay 50,000, the rate has been changed, but for the purpose of example, we are considering 5% also for this example. Otherwise, it would be 2%. But suppose the payment of rent is 50,000 in the month of March, then payer will deduct 30,000 and balance 20,000 he will pay as a rent to the landlord. We have the example, solved example. So you understand with the help of illustration number 7. So Mr. X, a salaried individual, pays 55,000 rupees per month to Mr. Y. So he's a salaried person. He does not have any business. So he will not fall under section 194I. So he can fall under section 194IB. So he is the payer individual. Rent exceeding 50,000. So that means applicability has been enforced. From June 2024, is he required to deduct TDS at source? And if yes, what is the amount of TDS deducted? And at which month we need to pay the tax TDS? So suppose if he stayed till the March, then we have to answer this question once. And suppose if he vacated the property in December 2024, then how TDS need to be calculated? What will be your answer if Mr. Y does not provide his PAN number to Mr. X? So here is the solution. So suppose first of all we are discussing the provision taking into the consideration that he does not vacate the property. So in the month of March we are going to calculate the amount of TDS. Since Mr. X pay rent exceeding 50,000 per month for financial year 24-25, he is liable to deduct TDS at the rate of 5% up to 30th September, and thereafter, of course, 2%. So the tax would be 11,000, that would be 55,000 into 2%, and for 10 months from June till March. So here TDS is not required to be deducted monthly. So at the end of the month, at the end of the year in which we required to pay the TDS, the rate is 2%. So for the whole amount of rent, the TDS rate would be 2%. For 10 months rent, we need to pay the rate of TDS at 2%. You need not to calculate like this, that from June rent till September, whatever the rental value, 5% TDS and thereafter 2%. This would be possible if it is a case of section 194I, in which we have to pay the TDS every month. But because section 194IB required the deduction at the end of the year, and at that time the rate is 2%. So we have to take the TDS 2% for the whole amount of TDS required to be deducted on the rent of 10 months. So it's very, very important point. Please do remember this point. Clear? So if this is the end of the year in March, the TDS requirement would be 11,000. Now the question says, suppose he vacated the property in December 2024. So what is the rate in December? Of course, again, it's 2%. So now the month would be only 7 months from June till December. And the rent was 55,000 for 7 months and the rate would be again 2%. So TDS liability would be 7,700 rupees. So the rent what the payer is going to be paid to the landlord was 55,000. Out of that 55,000, he deducts 7,700 and balance need to be paid to the landlord. Now suppose in case Mr. Y does not provide his PAN number to Mr. X. So if the person does not provide the PAN number to the payer, then TDS rate would be increased. It is 20%. The detailed provision would be discussed later in this topic, but for the time being, if someone is not providing the PAN number, if the payee does not provide the PAN number to the payer, then the TDS reduction rate would be higher, and it is been specified the rate of TDS or 20%, whichever is higher. So the 20% rate would be applicable. Now there would be a problem. Problem is what? As the section says, if in the month of deduction of TDS, the TDS liability is more than the rent value, then the maximum TDS deduction could be the amount of rent for that particular month. Now, due to the increment of rate, the TDS liability would be very high. You can see case number 1, that means when the TDS is going to be deducted in the month of March. So in that case, now 55,000 for 10 months and the rate of TDS would be 20%. So TDS liability would be 1,10,000, but it cannot exceed the amount of rent. So the rent was 55,000. So TDS liability need to be paid. It's 55,000 rupees only. Case 2, that means property has been vacated in the month of December. So in that case, again, the TDS liability would be 77,000, but should be restricted up to 55,000. So it's a very, very interesting and very, very important example for your examination purpose. Okay. Preeti Kumari, always in the end of the year, it will be 2%. It can be 5% for the first case. It will be 2%. If property has been vacated on or after September, in October, November, December, etc., then rate would be 2%. Suppose in this example, the assessee is vacating the property in September only. In that case, rate of TDS would be 5%. From June, July, August, September, for 4 months, whatever is the rental value, the TDS rate would be 5%. Tambeshwari is asking, sir, 2% and 5% not understand. It's so simple, Tambeshwari. We cannot make the diagrams of these simple provision. Up to 30th September, if the property has been vacated, then the rate would be 5%. And if the property has been vacated after September, the rate would be always 5%. I guess with the help of example, now it should be clear. Anil Army, sir, what is the reason for change in the rate? We cannot understand the reason behind it. The government knows the reason. Okay. Sabha Shakil is sir, case to repeat. Sabha, we are on YouTube. You can scroll back and you can understand the case as many times as you want. Okay. Because we have to cover a lot of provision and I'm trying to cover each and every point with the help of illustration also. So that's why we don't have that much time that we can revise the same thing again and again. Now, the very important section is section 194J, that is fees for professional or technical services. So with the heading, you will think that this section talks about the fees for professional and technical services only, but it is not so. We are covering total 5 kinds of payment under section 194J. Earlier, only 2 payment was included, that is professional and technical, but by the time passed on, department has inserted other payment also in this category. Again, 194J, individual HUF, exactly only those will be covered having turnover of more than 1 crore or more than 50 lakh rupees in previous year 23-24. Clear? So maybe you are seeing that is not been specified over here. Over here it just says that individual and HUF also included, but later in this section, those individual HUF do not have that turnover is going to be excluded. Okay. So now what kind of payment has been included? Fees for professional services, fees for technical services, any remuneration to a director of a company, any kind of royalty payment, or any non-compete fees referred to in section 28(6)(a). So non-compete fees, that is any payment for not using any know-how, copyright, etc. That is called a non-compete fees. That must have been discussed under PGBP head. Under section 28, your faculty must have discussed about the non-compete fees provision. So if any of these 5 payment has been made and the other condition has been satisfied, then TDS required to be deducted under section 194J with these 2 different rates. 2% in case of technical services fees, not being professional. Of course, professional has been covered for other rate, that is 10%. So for technical service, the rate is 2%. Royalty in the nature of consideration for sale, distribution, exhibition of cinematographic films, the rate would be 2%. 10% in other case. That means for case of director remuneration, for professional fees, and for other royalty cases, the rate would be 10%. However, this is again an important point. However, in case of payee, if payee is engaged in the business of call center, then the rate would be 2%. Clear? In all cases. Time of deduction is simple in this case. Again, time of credit or payment, whichever is earlier. Same copy paste as the other provision says. Now the threshold limit is 30,000 for each category. We are having 5 kinds of payment. One is professional fees, technical fees, royalty, non-compete fees, and director's remuneration. So for each category, the limit is 30,000. So if it is exceeding 30,000, if any payer is going to pay professional fees to same person exceeding 30,000 in a year, TDS required to be deducted. Same 30,000. Same for royalty, same for non-compete fees. For directors, there is no threshold limit. That means in case of director, even if the payment is 1,000 rupees, TDS required to be deducted. Professional and technical fees cannot aggregate. If there is payer, suppose A, he is paying professional fees 20,000 rupees to B, 20,000 to C, 20,000 to D. All professional fees. There is no requirement of TDS because for a single person, the payment should exceed 30,000. Suppose there is payer A, he is paying 20,000 rupees professional fees to Mr. B and 20,000 rupees technical fees also to Mr. B. Again, there would not be any TDS because these limits are separately made. It cannot be aggregated. So the limit is 30,000 in case of fees for professional, 30,000 in case of technical, 30,000 in the case of royalty, and 30,000 in the case of non-compete fee. So you can see there is not mentioning any threshold limit for directors. So that means there is no threshold limit. Any amount paid to the director would be liable to TDS. So the provision starting also says no tax deduction is required if the amount of fees or the aggregate of the amount of fees credited, likely to paid or credited does not exceed 30,000 individually. Okay. The limit has been specifically mentioned over here also. Fees for technical services, rate is this, limit is this. Professional, rate is this, limit is this. Royalty in the nature of consideration for sale, distribution, or exhibition of cinematographic films, 2%, 30%. Any other royalty, 10%, 30,000. Each separate category. Any other director's requirement, 10%, and there is no threshold limit. So any amount, we can understand that is any amount TDS required to be deducted. In case of payee, if that engaged in the call center business, already discussed this provision, the rate of TDS would be 2%, depending upon who is the payee. XYZ Limited makes a payment of 28,000 to Mr. Ganesh towards professional fees. So now you can see another payment of 25,000 to him on the same date for technical fees. So payment has been made to a same person, but for two different kind of services, professional and technical. 28, 25. No limit has been exceeding 30,000 separately, so there would not be any TDS. Clear? Now, non-applicability. Earlier, I have told you that in the starting of the question, if you will see, so there has been the sentence started, any person including individual HUF. So if you read that point over there, so you would feel that all individual HUF has been included. But you can see now the non-applicability, or we can say the exemptions, or we can say the clarification, whatever it is. Now it says, no, individual HUF only that person not liable to deduct TDS whose turnover is less than 1 crore and less than 50 lakhs. So, घूम फिर कर बात वापस से उधर ही आ गई. That under section we have discussed 194C, 194A, 194 HIJ, and there were more provision in which those individual HUF has been specifically removed. A, C, H, I, J, and R yet to come. Fine. So first, the non-applicability is the same case. Now, since the provision required, now this is a very interesting point. So this is kind of a bulb, like this should be, your brain should be start or working light a bulb if this kind of point is there. So you have to remember these points very carefully. Since the provision requires such individual HUF, that means whose turnover does not exceed 50 lakh or 1 crore. Clear? To deduct tax at source only in respect of fees for professional services or for technical services. It can be inferred that individual HUF are not required to deduct tax at source under 194J on royalty and non-compete fees. Now, what this clarification wants to clear, it's a very interesting clarification. So technically, if you will understand, understand the whole concept of section 194J in respect of individual and HUF pair. So if the pair is individual HUF under section 194J. Now what that clarification wants to explain, it wants to say that if your turnover exceeding 1 CR or 50 lakh, of course in previous year 23-24, then in case of TDS under section 194J, if it is technical fees or if it is professional fees, then TDS will apply for those individual HUF whose turnover exceeding 50 lakh or 1 crore. So that condition is only for technical and professional fees. For royalty and for non-compete fees, director case would not be applicable because that could be only in case of pair is a company. So for if those individual HUF, those turnover is exceeding 50 lakh or 1 crore, required to deduct TDS if they are paying technical or professional fees exceeding the specific limit, of course. But even if they have covered in this definition of 1 crore and 50 lakh, but if they are paying royalty or non-compete fees, TDS provision not applicable. And if you are an individual HUF less than 1 crore, less than 50 lakh, previous year 23-24, then technical fees, professional fees, royalty, non-compete fees, no TDS. So this is what that clarification wants to explain, that in case of only technical fees and professional fees, those individual HUF has been considered, those turnover exceeding 1 CR or 50 lakh. And the section is silent about the royalty and non-compete fees. So we can come to that conclusion that in case of royalty and non-compete fees under section 194J, individual HUF would not be included, whether turnover exceeded or whether turnover not exceeded. It's a very important provision. One more very important clarification, same as per section 194C. Under section 194C, there was an exemption, what I have discussed at the end of this section. It was there that if the payer is individual or HUF and payment to a contractor for personal purpose, then there would not be any TDS. The same provision is under section now 194J, but in respect of professional fees only. If the individual or HUF is payer whose turnover is exceeding 1 CR or 50 lakh, and if he is paying professional fees to any payee, but for personal purpose, then there would be No TDS. Suppose Mr. A is an individual whose turnover is 5 crore in financial year 23-24. He is paying professional fees to a doctor. Suppose Mr. B, 50,000 rupees in previous year for the health checkup or treatment of himself or his family members. So now individual is paying professional fees for his personal purpose, personal or family purpose. So TDS would not be applicable. Suppose this family checkup or treatment for his employees, not for his family purpose, but is for business purpose. Then of course TDS going to be applicable. So that is a very, very interesting point that has been explained at the end of this clarification over here. Further, an individual or HUF shall not be liable to deduct income tax on the sum payable by fees. Again, this benefit is only in case of professional service, not in case of technical services. Only this exemption is for professional service in case such sum is created or paid exclusively for the personal purpose. Again, this should be the part of your short notes, as I have told you. Just a second. In case of, let's see if there's any query. Royalty of films and other, we will see aggregate limit. No, that would be separate again. Fine, because the rate of TDS is also different for those cases. Pallavi sir, 1,10,000 is for 10 months deduction. In that 194I question you must be asking. It should be 1,10,000 for 10-month deduction. Yes. If during the financial year rent amount changes, then we will, if that is below 50,000 for that month, TDS would not be applicable. But if though for those months the amount has been exceeding 50,000, you need to calculate the aggregate of those months, Abhishek, and in the month of March or in the month the property has been vacated. The aggregate of that amount is required for the TDS deduction. Mallu Jadar is asking, sir, why it calculated 10 and 7? You have to read the question first, because the question is saying at once you have to calculate the TDS, supposing that the tenant has not vacated the property. So from June till December he was there. So from June till December, that was 10-month calculation. And suppose he had left the property in December. So from June to December, it was 7 months. So we have to calculate accordingly for the 7-month TDS provision. What is technical fees? Any kind of technical work fees would be called a technical fees, of course. If you want to understand the meaning of technical fees, kindly Google it. Nayan is asking, if technical fees for personal use, then TDS deducted? Yes. Only the benefit is for professional fees. If technical fees even for personal purpose, TDS is going to be deducted. Moving further. Now, meaning of professional fees, it's for your reading purpose. You can go through the provision. They will provide you that those person who would be treated as professional and what is the meaning of professional services. Okay. Then again, meaning of fees for technical services, you can go through it. You will understand the meaning of technical services. Point number 7. It says, suppose in case of hospital services, what will happen? There's a patient and there is a hospital who is providing medical services. That means a professional services. Fine. But suppose he is the payer. But suppose there's a third party cases in which third party administrator, in which insurance company is going to pay the hospital, not the patient, because patient has been insured. So the whatever amount the hospital charges, that is going to be reimbursed by the insurance company. So the question is there. Insurance company is not the patient. He is the third party who is just administrating this services. the real patient is not going to pay the amount to the hospital, but the third party is going to pay the payment to the hospital. So would section 194J would be applicable? The answer is yes. Whether payment has been made by the patient or by any third party, the service would be called medical services and TDS liability would arise. So the clarification says, the CBDT has through circular number so and so who are making payment on behalf of insurance company to hospital for settlement of medical or insurance claim, etc. under the various scheme including cashless, etc. The section 194J on all such payments to hospital, etc. This is because the service rendered by hospital to various patients are primarily medical services, and therefore the provision of section 194J are applicable to payments made by a third party administrator to hospitals. What is the meaning of computer software royalty? Kindly read this yourself because we have to cover a lot of provision. General explanation is there. A very interesting section, and in my point of view, one of the most important section need to be asked in the examination is section 194M. Now, in the last session, we have discussed that under section 194CA, under section 194C, under section 194A, under section 194I and J, individual HUF, those do not have a specified turnover has been excluded. But for section 194I, IB is there, who includes those individual HUF who does not covered under section 194I. Clear? But for section 194C, 194H, and 194J, for these three sections, individual HUF was not included if the turnover limit does not exceed from a specified amount. But for those individual HUF, those are not covered under section 194C, H and J. For those individuals, section 194M has been introduced. Exactly same we can say as for section 194I, IB was there. And for these three sections, now only for those individual HUF whose does not covered under section 194C for contract, work contract cases, H for commission cases, and J for professional technical services. Now section 194M is there. It's very, very important. Section 194M heading, you can see payment made by individual HUF. Who individual HUF it is? Those not covered under section C, H and J. For contract work, that is section 194C, commission brokerage 194H, or professional service 194M. Only professional services individual HUF included. Not for technical, not for royalty, not for non-compete fees, not for directors. Okay. Now applicability. The rate is under section 194M is the rate is 5% by an individual HUF responsible for paying any sum during the financial year to any resident. One more thing you need to keep in your mind, that if in case of work contract, commission brokerage, or professional technical services, etc., if TDS could be deducted under section C, H or J, then section 194M would not be applicable. So first we will see, can it be deducted under section C, H and J? And if that cannot be deducted under section C, H and J, then we will check section 194M. So C, H and J having the overriding effect on section 194M. How it will be done, that we will discuss in examples, do not worry. So for carrying out any work, any commission brokerage, any fees, that is only professional fees. Clear? It may be noted that only individual HUF other than those not covered in the provisions of C, H and J, those are only included in this category. Up to September, the rate was 5%, and from 1st October, the rate is 2%. Time of deduction is same, time of credit or payment, whichever is earlier. The threshold limit is huge. It is exceeding 50 lakh rupees. TDS required to be deducted if these payer, those are individual HUF, paying to any payee more than 50 lakh rupees in a previous year. Of course, for separate work separately. For work contract separate, for commission brokerage separate, and for professional fee separate. So if the limit has been exceeded, then TDS required to be deducted. Non-applicability. The non-applicability provision says if section 194C applicable, then 194M is not applicable. Same point number 2. If section 194H is applicable, then section 194C would not be, 194M would not be applicable. If section 194J applicable for professional fees, then in case of section 194M would not be applicable. Obviously, if those section has been applicable earlier and TDS has been deducted under these section, then of course no need to deduct the TDS again under section 194M in any situations. No requirement of 10, same as section 194 IB, there is no requirement of 10 number. Now illustration is very interesting and we have to understand each point of this illustration. Examine the TDS applicability in the following cases one by one. So first illustration says Mr. Ganesh, an individual carrying a retail business with turnover exceeding 2.5 crore, turnover of 2.5 crore in previous year 23-24. So now you can see Ganesh has been included under section 194 C or H or J provision. The payment is for contract payment. So that means this payment covered section 194J, sorry, 194C. So because his turnover is exceeding 1 crore in previous year 23-24, so he would be included as an individual under section 194C. Clear? So payer has been included. Nature of payment is contract and the amount is 5 lakh. The limit under section 194C is 30,000 for each contract or in aggregate exceeding 1 lakh. So limit has been exceeded. So technically in this section 194C would be applicable and TDS is going to be deducted on the basis of section 190C. But it has not been completed yet because the remaining information is here. Retail business with turnover of 2.5 crore. So that condition 194C applicable. But you can see payment of contract payment for repair of residential house. Section 194C says if individual or HUF pay for personal purpose, then section 194C is not applicable. 194C would not be applicable in this situation. So 194C not applicable. Can 194M could be applicable? Of course not, because individual HUF definition does not cover this individual, and even payment does not exceed 50 lakh rupees. So no TDS under section 194C and no TDS under section 194M. Clear? The second payment of commission. The same person paid commission to Mr. Walish for business purpose. Now commission payment under section 194H. The assessee has been included, the payer has been included in section 194H because turnover exceeding 1 CR. And for the purpose of commission, the payment should exceed 15,000 rupees. It is 80,000 rupees. So there is TDS required to be deducted in section 194H. So automatically section 194M does not cover this kind of payment. Now point number 2, Mr. Rajesh, a wholesale trader whose turnover was 95 lakh in previous year 23-24. Contract payment for reconstruction of residential house made during the period January 2025. So this kind of individual does not include under section 194C. So it will be included under section 194M. Clear? First condition fulfilled. Payment is for contract payment, that is work contract. So the third condition is amount should exceed 50 lakh rupees. So the payment was 20 lakh plus 15, that is 35 plus 20, that means 55 lakh. Now, very, very important and interesting fact. The payment has been made for residential house. So does TDS required to be deducted or not in example number 2? Please suggest what we should do. TDS need to be deducted in this case or not? The condition of individual is fulfilled. The payment exceeding 50 lakh, that is also fulfilled. The work is work contract, that has been fulfilled, but the residential house has been made. So whether this should be liable to TDS or not? Ambeshwari is saying no. Harshpreet is saying no. Hardik is saying it's personal purpose, so no. Anyone else? Okay, Nitin is saying no. Neeru is also saying no. Sania is saying should be liable. Why, Sania? Why it should be liable? Purv is saying no. Anil is saying no. Only Sania is saying it should be liable to TDS. Yet, why Sania? Whether is saying yes, professional service only personal. Professional service only personal. No, for under section 194C also personal services, personal contracts are exempted. Taba Shakil is saying no. Bhaskar Das also saying no. Now listen, the correct answer is yes. That's why I'm asking it again and again. The correct answer would be yes. TDS would be liable to deduct it. The reason is that personal contracts exempted under section 194C, as in this case 1 we did. In this case, because section 190C was applicable for this. So 194C is giving exemption from TDS if the payment made by individual or HUF for personal purpose. Now you can see section 194M we are discussing. Now this case falls under section 194M, and there is no exemption under section 194M. You can see we have discussed the provision, and there was nothing like section 194C, which has been exempted contract services in section 194M. Even not professional services would be exempted if TDS required to be deducted under section 194M. Section 194J exempted the professional service if it is for personal purpose. But section 194M does not give exemption even for work contract for personal purpose, even for professional service for personal purpose. So in this case, TDS is going to be applicable. If there is section 194C is applicable, then definitely it would be exempted. But because section 194M does not have any exemption for personal purpose, TDS required to be deducted definitely in this case. Clear? Next is Mr. Satish, a salaried person. So of course, if he is salaried, so there is no turnover of business. So he is outside the purview of section 194C or H or J, because the amount is for brokerage payment. So 194J, 194H is not applicable. But yes, he is an individual who does not fall under section 194H, so he will fall under section 194M. For brokerage payment, yes, brokerage is included in section 194M, and the payment is exceeding 50 lakh rupees. So there would be TDS under section 194M, because exceeding 50 lakh. Dheeraj, a pensioner. So again, no turnover. So 194M will include this person. Contract payment made during November for construction of residential house. No benefit for personal purpose, but the amount is less than 50 lakh rupees. Because it's been less than 50 lakh rupees, so there would not be any TDS. But now the question says, if Section 194M does not include it. Okay. 194C automatic not included because he is a pensioner and turnover detail has not been given. So you can find out the answers. Of course, over here, everything has been mentioned in detail. You can see the solution, of course. Now, one more section, which is different from all other sections till now. That is TDS on cash withdrawals. So if I have deposited my amount in a bank and if I'm going to withdraw that amount in cash, then after a certain limit, if there is a cash withdrawal from the bank, then bank will deduct the TDS with a certain percentage after exceeding a certain amount cash withdrawal limit under section 194N. So in this case, payer is bank. It's my money in the bank. And if I'll going to withdraw that money in cash form from bank, so I am the payee, then bank is going to deduct TDS under section 194N if a specific limit has been exceeded of cash withdrawal in a financial year. Section 194N provides that every person being a banking company to which Banking Regulation Act 1949 applies, or from a cooperative society engaged in carrying on the business of banking, or a post office. So these are payers. So if I have deposited my amount in a cooperative society or a bank or a post office, and now if I am withdrawing that amount in the financial year, and if the withdrawal exceed 1 crore rupees in case of bank, etc., and in case of society, 3 crore rupees is there, then 2% of that withdrawal is going to be deducted as TDS. Who is responsible for paying any sum, being the amount or aggregate of amount as the case may be, in cash exceeding 1 crore during the previous year, to any person or one or more accounts maintained by such recipient person with it, shall deduct TDS at the rate 2% of such sum. However, if the recipient is a cooperative society, tax is required to be deducted from any sum exceeding 3 crore rupees. The deduction is to be made at the time of payment of such sum. Modification in rate, the rate has been changed if that person who is withdrawing the amount, suppose Mr. A, he is the payee, he is withdrawing the amount, and he is withdrawing the amount in previous year 24-25. Then if he does not file his income tax return in the preceding 3 years, that means previous year 23-24, 22-23, 21-22. So if he does not file ITR, income tax return, under section 139(1) time limit, any of the 3 years, he needs to file ITR in all 3 preceding years within time. So if he is in default of filing of his ITR out of these 3 preceding previous year, any year, then the limit of TDS would be changed. Earlier, TDS required to be deducted after 1 CR or 3 CR. Now TDS required to be deducted if this is the default made by SSE after only exceeding 20 lakh rupees withdrawal. So the provision says if the recipient has not furnished the return of income for all the 3 assessment year relevant to the 3 previous year for which the time limit to file the ITR under section 139 has expired. So what is the time limit for filing ITR, etc.? That is going to be discussed in chapter number 8. That would be after this TDS chapter. For the time being, I have explained you that if we are withdrawing amount in previous year 24-25, then for 3 preceding previous year, our ITR should be filed under section 139(1). Time limit is specified by the income tax department, and if any of the year ITR does not file or does not file within the time limit, then the limit of deduction of TDS, which was earlier 1 crore or 3 CR, would be come down to only rupees 20 lakh. So then now TDS would be required to be deducted exceeding 20 lakh rupees cash withdrawal, and the rate would be also like this: 2% of the sum where the amount or aggregate of the amount as the case may be paid in cash exceeding 20 lakh but less than 1 crore. So TDS would be starting to deduct after 20 lakh rupees. So from 20 lakh till 1 crore, the amount would be that. So up to that 80 lakh rupees, TDS would be charged at the rate of 2%. And any amount which is exceeding 1 crore required to be deduct TDS at 5%. So we can say up to 20 lakh, no TDS. More than 20 lakh or up to 20 lakh, no TDS. We can write is like this: next 80 lakh, that means would be aggregate 1 crore, the rate would be 2%. Balance, the rate would be 5% in normal case, right? 3 crore in the case of recipient is a cooperative society. If the recipient is the cooperative society, then up to 20 lakh, no TDS. Next, 2 crore 80 lakh, rate would be 2%, and balance rate would be 5%. Do not worry, we have a solved example for it, so that would be really easy to understand. So if you do not file your ITR in the all three preceding previous year within time allowed under section 139(1), then the limit of 1 crore after for the applicability of TDS would be reduced to 20 lakh. And the rate would also be higher. From after 20 lakh till 1 crore, the rate would be 2%. And after 1 crore, the rate would be 5%. In case of cooperative societies, the recipient, up to 20 lakh, no TDS. From 20 lakh till 3 crore, that means the difference is 2 crore 80 lakh. The rate would be 2%. And after 3 crore withdrawal, the rate would be 5%. We have the solved example for this. Non-applicability, when this is not applicable, you can go through with the provision if the payment is made to. So technically, if the payee is himself government, if the bank is paying to the payment to the government, so if the payee, remember, if the recipient is the government, dusri bank company, any other banking company, government specified person, etc., then there is no applicability. Now here is the example, which is a very important example for the purpose of this point. And it says the person referred to in point number 1 to 6. We have 10 examples in this example, and it says from point number 1 to 6 cases, 3 years ITRs has been filed. So that default is not there. So it says the following cases from case number 1 to 6, suppose 3 years ITRs has been filed. So the limit would be 1 crore. Okay. And from point number 7 to 10, these 4 cases, suppose ITR has not been filed. So the default limit has been changed to 20 lakh, etc. Fine. So now one by one, we will discuss these cases. So point number 1, 2, 3, 4, 5, 6. Till point number 6, the normal limit of 1 crore and the normal rate of 2% would be applicable. So person making the withdrawal, who is making the withdrawal? Mr. Harshit is the recipient. Payment is from SBI. So he's the recipient. So limit would be 1 crore would be applicable. Date of withdrawal 1 July. 1 crore 10 lakh has been withdrawn. So up to 1 crore, there would not be any TDS. After 1 crore, the 10 lakh required to be deducted TDS at 20,000 rupees. We are taking it as a one-time withdrawal in this case. Clear? Second is again Mr. Pranav. So limit would be 1 crore. On 1st August, he withdraw 90 lakh rupees. So there would not be any TDSs there. ABC Cooperative Society. Now society is the recipient. And if society is the recipient, that means 3 crore limit would be applicable. Withdrawal is 2 crore 70 lakh rupees. So there would not be any TDS provision. Again, 4th case, society is the recipient. So 3 crore limit would be applicable. The withdrawal is 3 crore 10 lakh rupees. Only 10 lakh required to deduct TDS at the rate of 2%. Mr. Webhub, again individual, 1 crore limit would be applicable. 2 crore 10 lakh has been withdrawn. So 1 crore 10 lakh required to TDS at the rate of 2%. A Limited, again 1 crore 5 lakh rupees. So 5 lakh required to TDS at the rate of 2%. So up to case number 6, we assume that all return has been filed. Now in the next 4 cases, the limit would have been and the rate would have been changed. Now message D, E, F and company of firm, return has not been filed. So up to 20 lakh, nil TDS, and after 20 lakh, up to 1 crore. That means for next 80 lakh, rate would be 2%, and for balance it would be after 1 crore, 5%. Now withdrawal is 90 lakh rupees. So out of this 90 lakh up to 20 lakh, nil, balance is 70 lakh, 2%, TDS 140. Mr. Varun, same case, 1 crore 20 lakh. So up to 20, nil, from above 20 till 1 crore. That means next 80 lakh, rate would be 2%. And over and above 1 crore, the limit is also 20 lakh in this case. So 5% of 20 lakh and 2% of 80 lakh. Mr. Rakesh, he withdraw 25 lakh. So up to 20 lakh is limit free. Balance 25 lakh required to TDS at the rate of 2%. PQR Cooperative Society. This is interesting. So now the limit would be up to 20 lakh, nil. I said for next 2 crore 80 lakh, 2%, and balance 5%. Now the withdrawal is 3 crore 30 lakh. So this would be nil. 280 would be liable to 2%, and balance is 30 lakh rupees required to TDS at the rate of 5%. So you can see 282% and balance 30 lakh is 5%. Clear? So those were the detailed provisions of TDS. In the starting, I have asked you that please prepare the short notes for TDS provision. And I also saying that there is a format which has been framed by the institute in the study material for some other TDS provision. So it's my advice that for the above provision, what we have gone through till now, you should also make short notes in this format. So this is going to help you a lot in the examination to understand the provision in a one go. So there would be section, nature of payment, threshold limit, etc. Tambeshwari is asking point number 8 is why not 1 crore on 2%, which is what is point number 8, Tambeshwari? Up to 20 lakh it's free, balance is 70 lakh, na Tambeshwari? Where is 1 crore? Total limit was 90 lakh. So if 20 lakh was exempted, then balance 70 lakh is on 1 crore 20 lakh. Okay, 8th point you were asking. So from 1 crore 20 lakh rupees, starting 20 lakh is not liable to TDS. The balance till 1 crore, after 20 lakh, the remaining amount till 1 crore is 80 lakh. That is 2%. And above 1 crore, the limit would be 20 lakh rupees balance. That is liable to TDS for 5%. Hardik asking, sir, 50 lakh is aggregate or separate for professional and commission? They are separate. 50 lakh payment to the same person for separate work, because the nature of payment is different. So withdraw amount will include all expenses. Anything you withdraw, Kasak, that would be the part of your withdrawal, whether it's for personal expenses, office expenses, if you want to provide loan to anyone, etc. Does not matter. All kind of cash withdrawal, anyhow. Okay? Fine. So this is the format. What I was asking you to please make this kind of format for the above provisions also, to understand these provisions for revision and at the time of examination also. So now there are some other sections which is not that detailed in the study material, but those could be asked in the examination also. So one by one, we will discuss these section. First is section 194, 192A. Okay, let me open the PDF file for this. Just a minute. Page number 7.49. So this is the provisions from page number 7.49. First section is section 192A. That is, okay, so this is PDF. Cursor will not work over here. So we have to read the provision one by one. First is 192A, that is premature withdrawal from employees' provident fund. Clear? The provision says if threshold limit, the payment or aggregate payment exceeding 50,000 rupees, payer would be trustee of the EPF scheme, etc. So if you withdraw any amount from the employees' provident fund, and if the payment has been exceeded rupees 50,000, and of course, who is the payee? The payee should be the individual. Then the rate would be 10% on premature table withdrawal. What is the time for deduction of TDS? The deduction time would be at the time of payment. There are some exemptions. The exemption says if you withdraw after continuous service of 5 years, then TDS would not be applicable. Or in case of withdrawal before continuous service of 5 years, but employee opts for transfer of accumulated balance. So if you opt for transfer of your balance from one provident account to another provident fund account of new employer, that is called transferred balance. You must have read this provision in your salary topic, that if you are maintaining a provident fund with one employer, and if you are retiring from that company, or if you are leaving that company and you are going to another company, and you did not withdraw the amount of your provident fund, you transferred that amount to another provident fund of the other employer, the new employer. In that case also, that transfer does not liable for TDS deduction. So if you work for 5 years, after that withdrawal, there would not be any TDS. If you transferred your balance from one employer account PF to the other employer account PF, there would not be any TDS. And the last point, if you terminate and it is due to the ill health, contraction or discontinuance on business, cessation of employee, etc. So if there is any specific reason like ill health, etc., in that situation, TDS would not be deducted. Now section 194M, that is for dividend. The second case is 194, that is called regarding the dividend. And dividend includes all kind of dividend, whether under section 222A to section 222F. So that means we are talking about the dividend that is including deemed dividend. This is dividend including deemed dividend. We have discussed the deemed dividend section 222A till 222F. So if there's a payment of dividend from payer to the payee, then there would be TDS deduction. if the amount of dividend exceeding 5,000 rupees. If the amount of dividend exceeding 5,000 rupees, there would be a TDS deduction. If the receiver is an individual resident shareholder, if the receiver is the individual resident shareholder and the payment of dividend is exceeding 5,000, then TDS required to be deducted at the rate 10%. This is the Word file. Just a second. So section 194 discuss about the dividend, including dividends on preference shares, and dividend includes dividend under section 222A, 222F. The amount value is if it is aggregate exceeding 5,000 in a financial year in case of dividend paid or credit to an individual shareholder by any mode other than cash. So if the recipient is the individual shareholder, then the limit of 5,000 is applicable. But if the any other person is the receiver, then there would not be any threshold limit. So the benefit of 5,000 is only with the individual shareholder. If the receiver is any other person other than individual shareholder, then limit of 5,000 does not applicable. Here is the rate, that is 10% exemption from TDS. You can go through it. Those TDS, those dividend, those are exempted from TDS deduction. Section 194B, that is winning from any lottery, crossword puzzles, etc. So that is kind of a casual income. And I guess now that Word file will work from this point. Yes. So now the third point is section 194B, winning from any lottery, crossword puzzles, etc. So that means casual income. So TDS required to be deducted if it is exceeding 10,000 in a financial year. The rate of TDS would be 30%. Kindly read the exemptions or the cases in which there would not be any TDS or the other important points in the last column. Again, same section 194BB, that is for winning from horse races. So if there is a winning from horse races, again in the same case, if it is exceeding 10,000 in a financial year, TDS required to be deducted at the rate of 30%. Section 194D, that is the technical part of advanced tax and TCS also. So those procedural part I will ask you to learn yourself. You can read them and you can ask me your queries, of course. So if any immovable property has been transferred except agricultural land, then if the consideration or the stamp duty value exceeding 50 lakh rupees, any of it, whether consideration exceeding 50 lakh or stamp duty value exceeding 50 lakh, then TDS is required to be deducted at the rate of 1%, at the rate of 1% of consideration value or stamp duty value, whichever is higher. So this is the basic of this section 194 IA. For example, suppose consideration is 60 lakh rupees and stamp duty value is 45 lakh rupees. So applicability has been invoked because it is exceeding 50 lakh. Any value, if exceeding 50 lakh, TDS provision would be invoked. Now, what would be the TDS rate? Upon higher value. So upon 60 lakh, 1% required to be deducted as a TDS. Payment of 50 lakh consideration on for transfer any person, resident shareholder 1% consideration, meaning of consideration etc. That is exactly same as discussed in section in capital gain section 50C and other source also. Next is $194K, that is income on units other than in the nature of capital gain. So in case of shares, we receive the dividend. In case of mutual fund, if any regular income is received by us, then TDS would be deducted in section 194K. You can see the amount of threshold limit exactly same as in case of dividend. If we are earning any income on units, other than those which has been chargeable to tax under the head capital gain. So that means we are not selling it. So if we are earning any income on units and if it is exceeding 5,000 in a previous year, then it would be liable to TDS at the rate of 10%. One more important section, that is section 194 LA. It is for compensation. So under capital gain, we have discussed those provisions that is called compensations on compulsory acquisition. So if we receive compensation in any previous year exceeding 2,50,000 rupees, then TDS would be deducted at the rate of 10%. It would be applicable in case of certain immovable property other than agricultural land. So agricultural land has been excluded under section 194 IA as well as under section 194 LA. In both cases, there is no TDS if that is your agricultural land situated in India. TDS would be 10% only if the compensation amount is exceeding 2,50,000 in the financial year. Now section 194P is there, which is for pension purpose. So if any person receiving pension and if the pension amount is exceeding the basic exemption limit, for default tax regime, the basic exemption limit is 3 lakh rupees. For optional tax regime, it would be 3 lakh or 5 lakh. 2.5 lakh is not included because this is only for senior citizen. For senior citizen, the limit under default tax regime is same, but for optional tax regime, it would be 3 lakh or 5 lakh. So suppose there is Mr. A who is receiving pension and the amount of pension is exceeding his 3 lakh or 5 lakh as the case may be the limit. And there is TDS liability. So in this case, TDS would be deductible same as in case of section 192 calculation. That means we have to calculate his income from pension or interest, etc. Then whatever is tax liability, we have to calculate the tax liability. And on the basis of that, we can deduct the TDS on the basis of that tax liability. So there is no specific rate. We have to calculate his income and total income and his tax liability in this scenario. So the provision says this is only for in case of pension along with interest on bank account. So there should be only pension and interest income. Clear? The amount should exceed 3 lakh or 5 lakh as the case may be. Payer would be definitely a bank, and you should be a specified senior citizen. What are the rates? There is no rates. You have to calculate the tax as per default tax regime or optional tax regime as the case may be. Now, what is the meaning of specified senior citizen? That is interesting. Means an individual being a resident in India. So first of all, that should be an individual resident. Age should be 75 year or more. Having only pension income and interest income from same bank, in which pension credited from same bank interest income. He is having pension income and no other income except interest income received or receivable from any account maintained by such individual in the same specified bank in which he is receiving his pension income and is furnished a declaration to the specified bank. So he would be called a specified person in this scenario. We have the solved example also of this case. So do not worry, you will understand how to calculate TDS in case of section 194P in this respect. After rebate, etc., we have to calculate the tax, and that would be your TDS liability. 194Q is very, very interesting and important. And 194Q we will discuss with section 206C, 1, 1F, 1G, and 1H, because 194Q is related with section 206C, 1H. They are both interconnected. If 194Q is not applicable, then 206C, 1H would be applicable. So when we will discuss section 206C, 1F, 1G, 1H, and 1, this is TCS. These are TCS section. With those TCS section, we will discuss 194Q together. For time being, we are skipping section 194Q. 194R is for any benefit or perquisite, whether convertible in cash or not, into money or not arising from any business or the exercise of the profession. So we are not discussing the perquisite what an employee receives. Now we are discussing if I am running a business entity and due to achieving some sales target, etc. Suppose due to achieving any sales target, etc., I am receiving any perquisite from my dealer. Suppose I am running a car showroom. So these are the perquisite received by a business entity, not an employee. If received by an employee, that is section 192 would be applicable. And suppose a target has been given by the manufacturer that if you are able to sell 1000 cars in a financial year, you would be allotted some perquisite like a free holiday trip or any other non-monetary item, etc., or electric generator would be provided to you free of cost, etc. So if on achieving any sales target, if any business receive any kind of perquisite, then TDS would be required to be deducted under section 194R if the perquisite value exceeding 20,000, the payer turnover should exceed 1 crore and sale or profit 194R, simple provision. The rate of TDS would be 10% of that perquisite value. So those were the TDS conceptual point, what we have discussed. Now we have an example also. Question number 10 we are going to discuss. Stamp duty value means Is there any problem in the network? Let me see. Audio and video clear, sir, student, or is there any lagging of audio or video? No network issue, no? Okay, ठीक है. Fine. So now with the help of these example, you will understand the provisions, what we have just discussed, like insurance compensation, insurance received, TDS provision. We will discuss one by one in these illustration. SDV means stamp duty value, that has been discussed multiple times. TDS required to be deducted on the whole value if that limit has been exceeded. Suppose the limit is 10,000. So if the limit has been exceeded to 11,000, the amount need to be deducted on the full value. But there are certain special sections like section 194N. In case of 194N, if the withdrawal exceeding 1 crore, then on the excess limit only TDS required to be deducted. So when you will make the short notes, in 90-95% cases, if the limit exceeds, the TDS is required to be deducted on the full value. But there are certain examples, there are certain cases in which the limit will be applicable on the excess value. So you have to mark those points in which this excess provision has been applicable. So there would be only one or two cases in which this provision might be applicable. Clear? Okay, now examine the applicability of the provision, and I will ask you the answer of these questions because we have discussed income from other source also. So examine the applicability of the provisions of tax deduction. And I guess we will discuss it. Okay. Mr. X, a resident, is due to receive 4,50,000 on 30th June 2024. Now, in the case of insurance compensation received or insurance redemption value received, if that is not exempt under section 1010D and if the amount exceeding 1 lakh rupees, only in that case TDS required to be deducted. Fine. So when I am asking you the question number 1, 2, or 3, you have to apply these two provision, whether it is exceeding, it is exempted under section 1010D, or if the answer is yes, if that is exempted, then there is no point of TDS deduction. If it is not exempt under section 1010D, then you have to find it out whether the repayment is exceeding 1 lakh or not. So Mr. X, a resident, is due to receive 4,50,000 on 30th June 2024. After this example illustration, we will take a short break. Towards maturity proceed of LIC policy taken on 1st July 2021, for which the sum assured is 4 lakh and the annual premium is 1,25,000 rupees. So we are discussing the provisions on 1st July 2021. So the policy is, that is before 1st April 2023, there was only one requirement, which the premium should not exceed the 10% of the total sum assured. That 5 lakh rupees provision has been included from 1st April 2023. Then there are two provisions, 10% and 5 lakh both. But because this policy has been issued on 1st July 21, so only that 10% provision has been applicable. So now the provision says the annual premium should not exceed 10%, but in our case, the annual premium is 4 lakh rupees and the 10% would be 40,000 rupees and the premium is like 1,25,000. So that means there would not be any exemption under section 1010D. So TDS would be deducted in point number 1. You can see the solution that is not exempted. So TDS would be applicable at the rate of 5% on this 4,50,000 being the maturity proceed, and the amount of premium we have paid, that is 3,75,000 rupees. So the balance value is 75,000, which is required to deduct the TDS at the rate of 5%. Clear? Now, Mr. Y, a resident, is due to receive 3,95,000 on 31st December 24. on LIC policy taken on 31st 12 2011. In 2011, there was no percentage defined and all kind of payment was exempted because that was applicable from, I guess, 1st April 2012. The sum assured was 3.5 lakh rupees. And I guess the premium limit on 31st 12 2011 was, I guess, 20%. So the payment of premium is less than 20% of the sum assured. So in that case, because it's less than 20% of sum assured, so exemption of 1010D is there. And even if the payment is exceeding 1 lakh rupees, but due to the exemption of section 1010D, there would not be any TDS liability. Since the annual premium is less than 20% of sum assured in respect of a policy taken before 1/4/2012. Yes, that was 20% before 1/4/2012. The sum of 3.95 lakh due to Mr. Y would be exempt under section 1010D. And if there is exemption of section 1010D, then there would not be any TDS liability. Third is very interesting. Mr. Z, our resident, is due to receive 95,000 on 1st August 2024 towards maturity policy proceed of LIC taken on 1st August 2017, for which the sum assured is 90,000 and the premium was 10,000. Percentage was 10%. So you can see we are exceeding the premium payment, which should be 9,000, but the payment is now 10,000. So 1010D is not applicable. But the payment is only 95,000. For the purpose of TDS deduction, it should exceed 1 lakh rupees. So it is only 95,000. So there would not be again any TDS in point number 3. Illustration number 11. This is more likely not TDS, but it is more likely of capital gain and income from other source. So illustration number 11, you can try yourself. It's very easy. Section 194 IA is applicable. From illustration number 12, we will discuss the provision after a short break. So, Mr. Bhargav, can we take a short break? Can we resume, sir? Welcome back, everyone. I believe you must have your tea, coffee, etc. And there are some questions also from Hardik. He's asking, sir, if employer does not pay tax on non-monetary part, then sir will be included in the salary of employee, and then final tax liability will be calculated or not tax liability including non-monetary part upon 12. Definitely, all non-monetary part would be included in his salary for the calculation of TDS value. I guess we have discussed this kind of illustration in TDS provisions, the first illustration of section 192. There were two scenarios. In the first scenario, we were discussing that non-monetary part tax liability not paid by employer. In that case, we include those non-monetary perquisite, and TDS liability has been calculated on the tax on also on those perquisite also. And the second case of that illustration, it has been assumed that suppose if employer wants to pay tax on that perquisite, then what would be the tax amount? So example number one already explain your both questions, Hardik. The question number one, both conditions. Second, sir, can TDS of transporter be deducted in 194C? Yes, TDS of transporter can be deducted if that is not eligible for that exemptions. If he is plying hiring of goods and carriages, not more than 10, and if he is providing PAN number. So if he does not fulfill any of these conditions, TDS would be deducted at the rate of 1% or 2% as the case may be. Correct. Okay, Vishmita is saying certain page number 7.35 illustration 7194 IB in our study material answer is different from your study material. TDS is 5% is taken up to September and 2% from October. We are discussing as per the study material issued by the institute for assessment year 25-26, and on the basis of that we are solving those questions. If you have that kind of query, kindly send a mail to the Board of Studies, Vishmita. Okay. Chalo, we are moving on to the story would be at the end of the class, after the class. Okay. So TDS provision we were discussing. Moving on to illustration number 12. This is for section 194, the pension provision. 194P we discussed regarding the pension provision, I guess. So the example for section 194P is here in illustration number 12. Mr. Sharma, a resident Indian aged 77 years, get pension of 52,000 per month from the UP state government. The same is credited to his saving account in SBI Lucknow branch. In addition, he gets interest at the rate of 8% on FDR of 20 lakh rupees. That means 1,60,000 rupees interest. Okay. Out of deposit of 20 lakh, 2 lakh represent 5-year term deposit made by him on 1/4/2004. So on 5-year term deposit, we can claim 80C deduction up to rupees 1,50,000. That must have been discussed under deduction topic. Okay. Interest on saving bank account is 9,500 rupees. So he is having pension income. He is having FDR income, he is having interest income, and he is having a deduction of 80C also here. Now the provision says, from the above facts, compute the TI and tax liability of Mr. Sharma, assuming that he has exercised the option of shifting out of the default tax regime. So that means under optional tax regime, we have to calculate the tax liability. What would be the amount of TDS by SBI, assuming that the same is a specified bank? Is Mr. Sharma required to file his return of income for assessment year 25-26 if tax deductible at source has been fully deducted? Is Mr. Sharma required to file his return of income for 25-26 if the deposit bank is Canara Bank instead of SBI? So if the bank would be changed, then Mr. Sharma would be outside the definition of a specified person. So one by one, we will solve all these questions. First of all, the pension is 6,24,000 deduction. 1,60,000 is their interest on FDR. 9,500 is saving account. We have the GTI deduction of 5-year term deposit 1,50,000. We are having our TI. We are having TTB deduction of 50,000 for senior citizen. Total deduction is 2 lakh rupees. My income is 5,43,500. Tax liability rounded off is 19,450. So that is the answer of question number 1. SBI, being a specified bank, is required to deduct TDS at source under section 194P and remit the same to the central government. In such a case, Mr. Sharma would not be required to file a return of income under section 139. Why he is not required to file his return, that would be discussed in chapter number 8. Clear? So technically, the TDS liability would be 19,450 and bank need to deposit this TDS to the government. So point number 1 answer is there. Point number 2 answer is there, that he is not required to file his return of income. Why it is so? Because there is an exemption that is going to be discussed under chapter number 8. If the deposit bank will be changed, then he would be outside the definition of specified person, because for the purpose of being a specified person, the pension is created in the bank account. In the same account, the interest income would be there. Then Mr. Sharma would not qualify as a specified senior citizen. In this case, Mr. Sharma has to file his return of income under section 139 because his income is exceeding the basic exemption limit. So TDS need to be deducted as well as he need to file the ITR also. Now all TDS section has been discussed regarding the applicability of TDS other source incomes. On source of income, TDS required to be deducted. Now there are simple provision. You can read yourself because we have to complete the provision. The second again, interest or dividend, again very simple provision, just a procedural theoretical provision you have to read yourself. Those are the specific rate of TDS, and if the government allowed or the assessing officer allowed, the TDS rate could be lower than that. In that case, you have to file an application to the specified authority, and if they will grant that there should not be any TDS rate or the TDS rate should be deducted at lower rate, that would be possible if the procedure has been followed up. So the rate could be lower if you have that certificate of less deduction of TDS, or there could be no deduction in certain cases. You have to read yourself. Filing of declaration, etc. There are certain provision, certain steps you have to follow for taking the benefit of these things. For senior citizen, you can file form number 15H and G to the department or to the bank for non-deduction of TDS, etc. These are procedural aspect. Tax deducted is income received. So whatever income is received, you must have been remembered that when we discuss the provisions of residential status, I don't know any one of you have remember or not. In case of chapter of residential status, there was a concept of income arise in India or deemed to arise in India. And there was one more concept which says income received or deemed to be received in India. And in those provisions, there was an example of deemed to be received in India is TDS. TDS was income deemed to received in India. Why it is deemed to received in India? Because technically your payer deducted. If suppose there is 1 lakh rupees commission, A is going to pay Mr. B. Because it's exceeding 15,000, the rate of TDS suppose 5%. So A will pay 95,000 to Mr. B and 5,000 would be TDS and going to be deposited with the department. But at the time of calculation of his GTI, we include full 1 lakh rupees as his income because this 5,000 is not received by Mr. B. Actual received by Mr. B is only 95,000, but this is called deemed to be received because it has been deducted from his income which has been accrued to Mr. B. So that is called deemed to be received even when it is not actually received. So all TDS which has been deducted from the income of an assessee would be fall in the category of deemed to be received in India. Clear? However, there is exception. However, the following tax paid or deducted would not be deemed to be income received by assessee for the purpose of computing total income. One is if the employer takes the liability to pay tax on your non-monetary perquisites. So that kind of tax would not be treated as your income. That tax which has been borne by the employer himself on your non-monetary perquisites. And section 194N technically, because in that case there is no income, but there is a TDS liability on cash withdrawals. So that is not an income in your hand technically. That is your cash, your money, you are withdrawing it from the bank. So that is not going to be added as your income because there could not be any tax liability. Again, you can read it yourself. The duty of person deducting tax. That means the deductor. The deductor has main two duty. First of all, need to deduct tax and deposit it to the government. And then furnishing of information. We call it TDS return. He needs to file a TDS return that needs to be filed quarterly. So the person who is responsible to deduct the TDS having two major liability, deduction of TDS as well as deposit it to the government within a specified time, and as well as he has to file a return of TDS within a specific time duration. So that information of TDS deduction need to be transferred to the department. So the person responsible for deducting TDS should deposit the sum so deducted to the credit of department or the board directs within the prescribed time. Further, the employer who is himself going to pay the tax on the non-monetary, he needs to pay by himself. Then we have to submit the information under section 194IA, in which there was no requirement of 10 there. 194IB or 194M, they have to submit the information of TDS reduction to the Principal Director General of Income Tax in specific detail. The form has been specified over here within 30 days. If there is any correction, etc. required, you can correct it within time. The point number 5 is important. The fee, the late fee. If you are not able to file TDS return on time, then the penalty could be 200 rupees for every day. And that could be the maximum up to the amount of TDS. However, the total amount of fees shall not exceed the total amount of tax deductible or collectible, and such fee has to be paid before delivering the TDS statement. So 200 rupees per day is fine, which is termed as fees for late filing of TDS return. Consequence of failure to deduct or pay: if you are not able to deduct the TDS or to pay to the government, you will be called an assessee in default. So this is also for your reading purpose. Interest liability is important for the purpose of examination. It says a person deemed to be assessee in default under section 2011 to failure to deduct tax. If you are failed to deduct the tax or to pay the tax after deduction, is liable to pay simple interest of 1% for every month or part of the month on the amount of such tax from the date on which the tax was deductible to the date on which the tax actually deducted, and simple interest of 1.5% for every month or part of the month from the date on which tax was deducted to the date on which such tax is actually paid. So there would be two interest from the date of deduction till the date of payment. That would be 1% or 1.5% accordingly. Certificate of TDS deduction, etc. Form number 16 and 16A you have to submit. These are diagram regarding the all procedure aspect of your TDS, when we need to submit the TDS return, etc. The time of filing of payment, etc. The TDS return furnishing dates is specific over here. The payment dates have been mentioned over here. So you can read all the payment dates and the return filing date from this diagram in a same place. Who are the person liable to deduct the tax? So whatever the payer was there, that has been included in one place. You can go through with this provision also. Higher TDS is an important provision. It says higher rate of TDS for non-filers of income tax return. So if you do not file your income tax return, then the TDS rate could be twice the rate prescribed, at twice the rate or rate in force, at 5%, whichever is higher. Or this is not applicable for section 192, 92A, B, 4B8, double B, 1A, IB, IA, IB, M, and 194N. Meaning of a specified person has been mentioned over it. There's an important case also. This is high rate for TDS for non-filer of income tax return. And this is also important. Mandatory requirement of furnishing PAN number in all TDS. In that example of section 194 IB, we have charged rate of TDS is 20% if the pay does not provide his PAN number. So that was due to section 206 AA. So if you do not furnish the PAN number, then the TDS rate would be higher, and it would be the rate prescribed in the act as the rate in force or at the rate of 20%, whichever is highest, or 5% in the case of section 194Q. 194Q we have skipped for now because we will discuss section 194Q with section 206C1H. So that's why we did not discuss section 194Q. But if the PAN number has not been submitted under section 194Q, then the rate would be 5%. In all other TDS cases, the rate would be 20%. So that was default in submitting of PAN number. This is if you submit the PAN number but does not file the income tax return, then this higher rate would be applicable. If you default in both cases, not submission of PAN number, not submission of return, then the higher rate from these three and the higher rate from these three would be taken. And out of these two higher, whichever is highest is going to be applicable for the purpose of applicability of TDS. Now, advance payment of tax. This is the next technical provision after TDS concept. This is also a collection process of income tax to collect amount of tax of the estimated income in the same year. Before that, let's see if there's any query. Anil is asking, sir, could you please explain previous one? Kindly mention what previous one you want me to explain, Anil. Okay. So now advance payment of tax. This is also a part of collection of tax. Majority collection of tax is TDS, TCS, advance payment, and the last is self-assessment tax. So let me explain you the advance tax provision in a summarized way. Then we will discuss it with the provisions as mentioned in your study material. The basic points of advance tax calculation is if your estimated, the very important word in this provision is estimated, not actual. If your estimated tax liability for the year is exceeding 10,000 or equal to, more than or equal to 10,000, estimated tax liability for your previous year 24-25, then you have to pay this tax, whatever is estimate tax liability, then you have to deposit the estimate tax liability on some specific date and with some specific amount during the previous year for the purpose of advance tax liability provisions. So the first date is up to 15th June. So that means you have to calculate your estimated total income, ETI, and upon that estimated total income, your estimated tax liability by applying all the provision as in normal case by surcharge, education cess, deduction, etc., etc. But that is an estimation. Suppose we are talking about 15 June 2024. So on 15 June 2024, the actual time period has been elapsed from 1st April 2024 till 15th June 24. So almost 2.5 months has been passed away for this previous year. So on the basis of 2.5 months actual data, we have actual data only for 2.5 months. So on the basis of this 2.5 months actual data, I have to estimate my full financial year income and its tax liability. So if my 2.5 months sale is suppose 40 lakh rupees. So I have to estimate now if my 2.5 months sale is 40 lakh, what would be the sale of 12 months? Out of that, what should be my net profit? What would be my interest income? What could be my other rental income, etc.? What deduction I am going to claim, etc. And on the basis of this actual data of 2.5 months, we have to estimate our full year income till 15th June 2024. So technically, I am not making an estimation up to 15th June income because 15th June is the actual time. So estimation, why we are calling it an estimated tax liability? Because on the date of 15th June, I have to estimate what should be my final income up to 31st March 25. On the basis of that, I will calculate my estimated tax liability, and whatever is my estimated tax liability, I have to deposit up to at least 15% of that estimated tax liability up to 15th of June. Suppose my estimated tax liability is 3 lakh rupees. So 15% of this, that means 45,000 need to deposit as advance tax. Now there must be a question in your mind, what will happen if I'll not do this? So if you will not do this, you have to pay the interest under section 234B or under section 234C or under both sections. It will depend that you need to pay one interest or you might need to pay both interest under section 234B and C. How it will be imposed, that we will discuss. So on 15th of June, we had to do this. Suppose we have calculated our income and the tax is suppose 3 lakh. So we need to deposit at least 45,000. You can deposit more, but if you'll deposit less than 45,000, there could be interest. Now the second date is after 3 months. That would be 15th of September. Now up to 15th of September, again I have to calculate my this year income. Now suppose, now we have April, May, June, July, August. So now we have 5.5 months actual data. On the basis of this actual data, now my estimate would be more precise than what I have assumed on June 15th. On 15th September, I have more actual data. So my estimation would be better than this estimation, what I have made on 15th of June. So let me ask you one question. The estimated tax liability on 15th September would be same 3 lakh rupees or it could be changed? It would be same. My total income estimation of now up to 31st March 25 would be exactly the same as we have calculated on 15th of June, or it could be or should be changed. Yes, of course, it can be changed. It could be changed. And in my opinion, it will definitely change. Of course, more probabilities for a change because my estimation would be now for 5.5 months actual data, and that could be definitely affect my future estimation and in the practical case as well as theoretical also. For the purpose of examination also, definitely there would be a change. There could be increment of sale also. There could be any new order which we did not expect, or there could be loss also. There could capital gain income. Like there are some income what we cannot calculate in our estimation, like casual income. We could win a lottery. Capital gain. We could not estimate our capital gain that we are going to sell any property, etc. So that is not a kind of a projection what we can make in June. So that could be a new income, a dividend declaration by a company, etc. could be there. So there could be definitely a change. And now suppose my estimated tax liability is now 4 lakh rupees. Now the rate is 45% we have to deposit for our estimated tax liability. So now 45% of 4 lakh it's 1,80,000. But I do not need to deposit this because out of this, we have already deposited 45,000. This is aggregate value, including this 15%. So out of 180, we have already deposited 45,000. So my tax liability would be 1,35,000. This is called my estimated tax liability on the basis of the actual data what we have on 15 September. On the basis of that actual data plus my estimation, my tax liability and advance tax would be changed. Now the next date would be after 3 months, and that would be 15th of December. Now I have actual data of 8.5 months, and let me tell you in a practical life, on this date, my estimation would be more precise than the earlier dates because now I have actual data of 8.5 months and I have to make this estimate of like 3.5 months. That is the estimation time duration. And of course, there could be a possibility that this could change or this could increase or it could also decrease also. Now suppose due to some loss which has incurred between these 3 months, there might be some loss incurred in business, etc., or there could be any new deduction has been there. So my estimated tax liability got reduced. Suppose now it is only 2 lakh rupees for the full year. So on the basis of this, now my estimation tax liability, TDS required to be deducted 75%. So that means TDS should, so not TDS, advance tax should be 75%. That means total would be 1,50,000, out of which I have deposited first 45,000, and in the other second installment I have paid 1,35,000. So technically I have paid extra. The requirement was only 150, but I have paid 45,000 and 135. So there is no payment required to be made because I have already paid extra 30,000. So the liability is in negative. That does not mean department is going to refund this amount. No, and not even they are going to pay any interest on this. They'll say if this is extra, you can claim it at the time of filing of income tax return as you claim TDS, etc. But this at this point of time, we are not going to refund anything. So at this date, there is nil advance tax liability. You not need to deposit anything, but the extra amount is not going to be refunded to you right now. It is going to be refunded in assessment year at the time of filing of return if the same tax liability remain at the time of filing of return. Now the last date would be 15th of March. And now I have actual data of 11.5 months and I am only required to estimate for next 15 days. So that would be the most precise and accurate data for the purpose of calculation of my estimated tax liability. Suppose there is some new order, new sale arise, or there might be some long-term capital gain, any new income, etc. And now my estimated tax liability, suppose on this date is 5 lakh rupees. And the last installment value is 100% of this estimated tax. So now I have to deposit full 5 lakh, out of which I have deposited 45,000 and 135. So 180 has been deposited. 3,20,000 was my advance tax liability need to be deposited up to 15th of March. Now there could be a practical problem. On 15th March, I have calculate my estimate tax liability 5 lakh rupees. But from this 15th March till 31st March, suppose there is some new casual income arise. which I could not expect, which I could not estimate also. There is some other capital gain arise, which was not included in the above category. And suppose on this income, extra 50,000 tax liability arise. So technically, my tax should be total 5,50,000. But this income, these are that kind of income which could not be estimated by anyone. So if any new income has been arise between this category, which could not be estimated logically, and if there any extra tax is there, so we cannot say that there is a short payment of advance tax. The total would be 550 and you have deposit only 5 lakhs, so there would be interest. So if there is any interest also, there is any tax arises between these 15 days, and if you pay this tax up to 31st March 25, even after 15 March, if you pay this tax up to 31st March 25, so it would assume that this tax has been paid up to 15th March. Why I am telling you this? Because due to this shortfall, there would not be interest under section 234B or 234C. Department cannot say, "Arey, you have shortfall of 50,000 rupees, so you have to pay interest." No, department say, "We understand this is a genuine problem that if within 15 days any new income arise which could not be estimated, because the nature of income like dividend declared by a company. So how can we estimate that the company is going to declare a dividend? So if dividend declaration, any casual income, any new capital gain arise, then in that situation, if the extra tax has been paid by us up to 31st March, it would be assumed that it has been deposited up to 15th of March. And there would not be any interest under section 234B or 234C due to the shortfall of advance tax paid on 15th March. Clear? So these advance tax provision is for all assessee, whether corporate assessee or whether non-corporate assessee, except one. Those covered under presumptive taxation scheme. Under PGEP, you must have gone through with this. The presumptive taxation scheme. So if an assessee falls under presumptive taxation scheme, then he does not need to deposit the installment on 4 dates. For that assessee, there is only one date requirement to deposit the tax, and that is up to 15th March. There is no 15th June, no 15th September, no December. If you fall under presumptive taxation scheme, then on 15th March 2025, you have to estimate your income tax liability. And whatever your income tax liability, deposit 100% of tax. So technically, we just need to learn one date and one percentage in case of presumptive taxation assessee. That's a good news. You do not need to learn any new date, any new provision. Only the last date would be there for them. They do not need to require deposit anything on 15th of September, December, or June. They just need to deposit their full tax liability on 15th of March. The same benefit for those also. If any new liability in 15 days, they can deposit up to 31st of March. That would be assumed that it is deposited on 15th of March. So that is the whole provisions of advance tax. Advance tax provisions are not applicable in case of senior citizen having no business income. So if you are a senior citizen and you do not have any business income, but you have rental income, etc., and that estimated tax is suppose 1 lakh rupees due to that rental income, interest income, no TDS applicability. They just need to pay tax at the time of filing of return of income. Advance tax is not applicable on those assessee. Pooja is asking, in case of 194N cash withdrawal, which amount have to be added in gross total income as deemed income, whether it is withdrawal amount or TDS amount, in which head we would we add. Pooja, understand the provision of section 194N. There is no requirement of adding. We have just discussed also that under the definition of deemed to received, section 194N withdrawal would not be form part of your income. Okay, ऐसे समझो देखो, fine. You are running a business. ठीक है? You earn 1 crore rupees by the sale of your product. 1 crore rupees is your revenue, your sale. Fine, you sell and you earn from your buyer 1 crore rupees. You deposit that 1 crore rupees in the bank account. Clear? Out of those 1 crore, you withdraw. Okay, you have earned suppose 5 crore rupees and you deposit 3 crore out of your 5 crore, you deposit 3 crore in your bank account. Clear? Now you withdraw 1 crore 20 lakh rupees from the bank in cash withdrawal. So the excess 20 lakh would be liable to TDS. Understand? But that 20 lakh is not your income, na? You have already include that 5 crore rupees as your sale in your books of accounts. So anything you will withdraw, and if that is liable to deduct TDS, it cannot be your income because it's your money. It cannot tax twice. So that's why Section 194N is specifically saying that anything which is liable to deduct TDS under Section 194N would not be treated as your income anyhow. We have discussed it, okay? So if a person is having only salary income, then still advance tax payable and TDS also. So if his estimated tax liability after deducting TDS, if that salary person estimated tax liability after deducting TDS is exceeding 10,000, then yes, he has to deposit advance tax. Suppose he has also some rental income. Suppose he has some interest income. Suppose he is not informing to his employer or his employer is deducting less TDS due to any reason. So if his estimated tax liability after deduction of TDS is exceeding 10,000, the balance amount, he has to pay advance tax. Okay. So back to the provision. Due to this diagram, it would be really helpful that we can understand the provision very easily. So liability of payment of advance tax. Now understand, everyone need to pay advance tax if your tax payable is 10,000 or more. And if you are not fulfilling the provision, you have to pay interest under section 234B and 234C. How 234B and C would be applicable, that we will discuss later. In case of senior citizen who have passive source of income, that means no business income, not having an income under PGBP head or at the age of 60 or more, advanced tax provisions are not allowed, not applicable. Now, computation of advance tax, you can read the provision, but I've already explained you with the help of an example. Everything has been discussed in the example. The due dates and the time duration and the amount of percentage has been mentioned over here. 15 June, September, December, March, except those SSC, those are under presumptive taxation scheme. For those SSC, there is only one date, that is 31st of March. That note which has been discussed with you, that if advance tax has been paid between 15th March till 31st March, before 31st March, that would be treated as advance tax of the financial year ending on 31st March. For the purpose of 44 ADA or ADA1 or AD1, there would be only one date to deposit the advance tax, that would be 15th March. Whole amount of advance tax as one installment on 15th of March. The same benefit of paying any tax before 31st March would be available to them also. If they not fulfill the provision, 234B and C provision would be there. Credit for advance tax. Interest for non-payment or short payment of advance tax. How interest would be applicable on non-payment or short payment of advance tax, that we will discuss in next session. There is 234C also, 234B and 234C. With the help of example, I will explain you. So you will be able to understand how to calculate. If I'm just going to read these provisions, so you might not be able to understand how to calculate interest under section 234B and 234C. So section 194Q, 234B and 234C. These provisions we will discuss in the last session, that would be day after tomorrow. These are 234C provision. I just want to cover the advanced tax important provision. So we could go to the last topic, that is tax collection at source. Okay, so here we go, tax collection at source. Now, how it is different from the basic provision. In case of TDS, there is one person who is payer and one person is pay. And there are some sources of income on which TDS is required, except section 194N, because section 194N does not include any source of income, that is on cash withdrawal. So if there is a payer and if there is a pay and pay is earning a specific source of income, then on which TDS required to be deducted. If it is 100 rupees and the rate is suppose 5%, then 5 rupees would be deducted by the payer, and that is going to be deposited with the government, and the credit of which you can claim at the filing of return. Who can claim? The pay. So pay will receive 95 rupees, but for the purpose of GTI, his income would be 100 rupees because this 5 rupees will be treated as income deemed to be received. Then whatever his tax liability, suppose 9 rupees is the tax liability, the 5 rupees of TDS, whatever has been deducted would be deducted, and the balance tax liability would be 4. If tax liability is 0, then this 5 would be refunded to the assessee. So that was the basic process of TDS. Advanced tax has some other logic. It needs some estimated tax liability of 10,000 or more. Then if that condition has been fulfilled, you have to pay a certain amount of installment at a certain date to deposit to the department. And that credit you can claim at the time of filing of your ITL. Now TCS is on some transactions, tax collected at source. So in this case, the payer is going to deduct it from income. Deduct it. He will not ask you the amount he is going to pay you. He will deduct it from your amount and will deposit it to the government. Now TCS name is not deducted, it is collected. So that is the extra amount he will charge from you. So now how it will happen? Now there is a payer, there is a pay. Suppose you buy a car of rupees 20 lakh rupees. So you are the customer. Clear? And he is the dealer. Now you are going to pay 20 lakh rupees to the dealer. Now TCS has been applicable if you are going to buy a car or a motor vehicle exceeding 10 lakh rupees. So now TCS need to be charged on it. And the TCS would be applicable on this 20 lakh rupees. Suppose it is 1%. So 1% of 20 lakh, 20,000 rupees. You have to pay extra to the pay. So now you will pay to the pay 20 lakh. The invoice raised by the pay would include like this, the car cost and the TCS 1% would be in the invoice. And now this invoice would be paid by the payer. So 20 lakh rupees would be with the pay, and this 20,000 would be deposited by the pay to the government department as the TCS of Mr. Payer. And this credit you can claim at the filing of return as same in case of TDS. But the difference is between that is called deduction. So if 100 rupees going to pay to you, then the 5 rupees would be deducted by the payer and he needs to follow the whole process of filing of TDS, tax, filing of return, etc. And the benefit would be available by the payee. In case of TCS, the provision is reverse. The payee will raise an invoice if that transaction falls under TCS concept. Then payee will raise an invoice, and on the value of that invoice, including the GST also, there is also a difference. In case of TDS, the service tax GST element would not consider. We have discussed that. In case of TCS, the GST component will form part of this deduction. Suppose 20 lakh was the cost of the car, 2 lakh rupees was the GST. Then TCS would be upon 22 lakh rupees. So under TCS, pay will raise an invoice, and if TCS provision is applicable on that transaction, then extra TCS percentage would be added into that invoice value, and payer need to pay the whole amount, out of which the TCS value would be deposited by the pay. Now the compliance is upon pay. On pay, he will deposit, he will file the TCS return, and the benefit would be claimed by the payer at the time of filing of the return. So that's why the name suggests the difference. It is deduction, it is collection. So collection would be always extra. It cannot be included in the value of that transaction. It would be extra collection by payee from payer. This is deduction, so it is not extra, it is inclusive. So we deduct the amount from the income of payee. And this is the transaction we have to charge extra from the payer for these transactions. So that is the basic difference between TDS and TCS. Preeti is saying in this case, pay will collect the tax. Yes, pay will collect the tax. All compliances are upon pay, not upon payer in this case. Understood? So that was a concept of TCS. And we have not much section in TCS. There is section 2061, then 1C, H, 5, 6 sections are there. But when they will correlate with 194Q, so that would be a problem. And there are multiple test your knowledge questions, sorry, not test your college question, but frequently asked question queries has been provided in this, because this is still a lot of confusion in TCS also. So for that purpose, they have provided you questions, answer to make clarification that how that will work. So basic, we have 5 sections of TCS that we will discuss in the next class. And then with that, we have to discuss section 234B, 234C, and section 194Q, and our MCQ also, and test your knowledge questions. So if there's any query, kindly ask me. So after that, we can start our short story. And after that, we will end the session. If there's any query, please ask me. Definition of work, page number 7.28, point number E. Page number 7.28, point number E. In my study material, there is no point like E. Are you sure, Hardik, that associate 1? Study material point number 7.28 is illustration number 5, Hardik. Definition of work would be somewhere else. Meaning of rent is there. Sir, will TDS be deducted on commission on security? Look, section 194D is for commission or insurance commission. Section 194G is for lottery commission. All other TDS deduction for commission would be in a section 194H. So that would be deducted in a section 194H. Okay, any other query? So let's discuss a simple story so we can conclude. Okay, 194H, is there other than security? 194H is for commission, for any kind of commission. Hmm. 7.23 now, I think is saying definition of work is saying point number E, manufacturing or supplying a product according to the requirement. So if I want to manufacture something and for job work, if I'm transferring my goods for job work on which a specific kind of process needs to be done, and I will specify that process to the person who is undertaking the job work process, that will also include in the definition of work contract. So it's saying manufacturing or supplying a product according to the requirement or specification of a customer by using material purchased from such customer or its associate being a person related to the customer in such manners defined in section so and so. So that would be the part of work. What is the confusion in this, Hardik? We have discussed an example also, no, that shoe manufacturing, invoice value, including material and work. So it is says that kind of work. So you can write it down for the purpose of understanding. E point is talking about job work process in which we could send the material or the material could be associated with that person. So if it is related with you or not does not matter. It would include as a work contract. So we are just discussing what the meaning of work, and work include any job processing work on the basis of manufacturer as per his specification, etc. तो बच्चों चलो स्टोरी टाइम. ओके, एक बहुत बड़े साइंटिस्ट की स्टोरी है एंड माइट बी आप में से कुछ बच्चों ने सुना हो, एंड इट शोज द पावर ऑफ पॉजिटिवनेस और द पावर ऑफ गुड वर्ड्स. सो साइंटिस्ट थे, आपने सुना होगा, थॉमस एडिसन, who invented the light bulb. It's a real story. What happened जब वो एक स्कूल में पढ़ते थे तो वहाँ स्कूल के टीचर्स उनसे बहुत परेशान थे बिकॉज वो बहुत ज्यादा क्वेश्चन पूछते थे और बहुत ही अलग टाइप के क्वेश्चन पूछते थे. तो एक दिन स्कूल के टीचर्स ने उन्हें एक लेटर दिया और बोला अपनी मम्मी को जाके देना. जब वो घर आए उन्होंने वो लेटर अपनी मम्मी को दिया और बोला कि सर ने बोला है कि इसे आप पढ़ो. उसकी मम्मी ने वो लेटर पढ़ा और उस बच्चे ने पूछा कि क्या लिखा है. तो उन्होंने कहा, मम्मी ने बोला उसको कि स्कूल से लेटर आया है और वो कहते हैं कि आपका बच्चा बहुत जीनियस है, वो बहुत होशियार है और हम उसके क्वेश्चंस का आंसर प्रॉपरली नहीं दे पाते. तो प्लीज आप इस बच्चे को खुद पढ़ाइए या किसी दूसरे अच्छे स्कूल में भेजिए और जहां पर हमसे बेहतर टीचर हो उसे पढ़ाने के लिए. तो बच्चा सुन के बड़ा खुश हुआ और उसकी मम्मी ने फिर उसे घर पे ही पढ़ाना शुरू करा और पढ़ाते पढ़ाते ही बिकेम्स थॉमस एडिसन, who invented bulb and moving cameras, etc. A lot of inventions, we all know him. एंड जब उनकी मम्मी की डेथ हुई आफ्टर दैट, उन्होंने वो जो एक बॉक्स था उनके घर में जिसमें वो लेटर रखा था, ही फाउंड दैट लेटर. और उस लेटर में स्कूल से लिखा गया था कि आपका बच्चा बेवकूफ है, ही इज नॉट मेंटली फिट और उसके क्वेश्चन बहुत ही बेकार होते हैं, तो इसे हम स्कूल से निकाल रहे हैं, वी एक्सपेल्ड हिम, तो आप इसे घर पर ही रखिए. बट उसकी मदर ने उसे ये नहीं बताया. कि मदर ने उनको बोला कि उनको कहा गया है कि वो बहुत होशियार है. एंड दैट वाज द पावर ऑफ द वर्ड व्हाट शी एग्जैक्टली चूज, दैट वाज द पावर ऑफ पॉजिटिविटी. जब स्कूल से वो लेटर उनकी मदर ने उन्हें बताया कि उसमें लिखा है कि वो बहुत जीनियस है, तो उस बच्चे ने और अच्छी तरह पढ़ना शुरू कर दिया एंड ही बिकेम द वर्ल्ड फेमस साइंटिस्ट. सपोज अगर उनकी मदर ने उन्हें सच में ये बोला होता जो सच में उसे लिखा था और मे बी उस पर ट्रस्ट नहीं किया होता, तो मे बी वो उतने बड़े साइंटिस्ट नहीं बन पाते और ही विल बी पॉसिबल होता कि वो बहुत डिमोरलाइज हो जाते और शायद पढ़ाई नहीं कर पाते. बट द पावर ऑफ पॉजिटिवनेस यही होती है कि आप अगर अपने आसपास चीजों को पॉजिटिव रखेंगे, खुद पर भरोसा रखेंगे, अपने आसपास ऐसे लोगों से कनेक्टेड रहेंगे जो आपको पॉजिटिव चीजें प्रोवाइड करें, आपको डिमोरलाइज ना करें. जो भी आपसे ऐसा कहता है कि आपसे सीए नहीं होगा, ये कोर्स बहुत डिफिकल्ट है, उससे नहीं हुआ, इससे नहीं हुआ, उसको टाटा बाय बाय कर दो. दे आर नॉट गुड फॉर यू. दो लोग आपको इनकरेज करते हैं, जो लोग आप पे ट्रस्ट करते हैं, आपको डेफिनेटली उनके साथ रहना चाहिए. और खुद भी अपने आप पे भरोसा रखिए. बी कॉन्फिडेंट दैट ऑफ कोर्स ये कोर्स हो सकता है, आराम से हो सकता है. यू जस्ट नीड टू प्लान इट, डू इट, एंड यू विल गेट इट. इट्स माई प्रॉमिस, यू विल गेट इट. if you'll plan it accordingly and you are going to put your hard work in this. So we will see each other day after tomorrow. Have a happy new year again to all of you. We will see day after tomorrow with the other provisions of TCS, advanced tax, and TDS. Have a good day, everyone. Sir, can we close the session?